Hello, everyone. I hope that you had a wonderful weekend and a relaxing one as well. So, good afternoon, good morning, good night, wherever you are. Today we'll be, you know, shedding light on, a few things that I didn't really want to be talking about right now, but, we will. And we'll be going over the price action of the previous week, right? Whereas, what we expected to happen at the times that we expected it to happen happened. Within the index futures triad. So on screen, you can see the base of our analysis, and that's what it is, right? The base of our analysis. We have the, engineered volatility, which is pre-planned every week, right? So as you guys realize, 75% of the times, right? And because there's a time for everything to happen whenever it comes to price action and everything else outside of price action as well. So whenever we have high impact news events, the days that we have high impact news events, those are the days whereas we'll be looking for the high and low of the week to form, right? So every week has a low and every week has a high, right? So you don't need to be looking for just, the high to be formed. You can look for the low to form and then the high to form on these specific days, right? So already you can see that we don't have news on Wednesday and we don't have news on Friday, but we have news on Thursday, right? So we can expect that whenever we get the volatility between Monday and Tuesday, right, which will, allow price to expand, right? In regards to the direction of the sequential SMT, then the week will be capped by Thursday, right? Well, it should be capped. More than likely it will be, right? So it's very high probability that, Thursday will be a terrible day, Monday, Tuesday as well, of course, right? But if we do not have, right, and I'm saying this due to the fact that we have a news event, right after the New York session, which will be in the afternoon session on Monday, right? Whenever you have that, right, those days tend to be a lower probability and not as one-sided as the days whereas you just have news events in one session. That's something to, take note of. So Monday we'll get volatility. It will be tradable tomorrow, right? You already know what to look for, right? In regards of the weekly cycle, right? If there is sequential S&T between Friday and Monday, then what do? Right? You move forward and, you trade in the direction of, if it's a bullish sequential S&T, you buy. If it's a bearish sequential S&T, you sell. It's basic knowledge here. Tuesday, we have core sales and retail sales, right? We have two high impact news events on Tuesday, right? So if Monday, right, if it's choppy, if it consolidates, if there's not really any expansion, but I believe that there will be some expansion this week. There will be some disruption to price action due to the fact that Trump, allegedly, some quote unquote live TV got aimed at, or because I can say right, sniped, that they tried to assassinate him, as they say. So that will directly affect the marketplace for sure, right? We will see volatility because of that, and then we have Elon Musk saying that he has been, under the same attacks for the past 8 months, right? So whenever you see political issues like that developing, then you know that for sure we have a higher time frame reversal underway. Even if it takes weeks to come, those are the signs, right? those are the signs of, the volatility that the market has in store for us. Looking at the US dollar, in comparison to the euro and the Great British pound, right? First of all, you guys knew that we were aiming for buy-side liquidity for the Great British pound and the euro, right? Here, right? We did not get the sequential SMT, right? But, right, if the euro runs above here, and this is something that you should take consideration, right? Of if whenever you're looking for a run on liquidity, right? And, you have a wick here, right? And if the wick isn't here, which is not in, the other dollar index, from another data provider, then you can use this one, right? Or even this one right here. So you'll get the same measurements here, right? So here, right, if you put, that box down there, right, you would like to see price, clear that box, or at least clear 75% of it, before seeing, price reversing. So for me, this is too shallow. I have a stop run right here. And also, we do not have, a lower time frame sequential SMT, right? So the smaller boxes right here, they represent the monthly cycle, right? So this would be the second week of the month, and this would be the third week of the month, right? So we would like to see, sequential SMT on these, within these cycles, or on the daily cycle before we look for, anything specific. And here we can see that we have price, right here. So definitely, I would like to see price being drawn to this high right here, right? So we were aiming for this high, and after this high, right, everything became unclear, right, until now. Then now that we know that we should aim for this high before anything, specific happens. In regards to the British pound, we did, right? Price did do what we expected. It traded higher, right? Which was here was a drawn liquidity, and it cleared this high as well. So for now, right, definitely we need to see, price clear this low properly, right? Clear this high properly, and then we will, scan our charts and see if we have any intermarket sequential SMT, if you have a lower time for sequential SMT, which would allow price to rebound, higher. And if we have no sequential SMT, we'll just keep falling, right? In regards to the dollar index. So this is where you will have a lot of aha moments, right? So first of all, you can see Monday's expansion model here, which took place last week, right? So here we had the S&P 500 during Q2, which was Tuesday, failed to break below the low of Monday, while failing to break below this, the true week open, right, as well. Here we had the NASDAQ failed to break below Monday as well, but it did trade below its true open. And then here we had the Dow breaking below Monday's low, right? And this created sequential SMT, right? And sequential SMT within a pair, it occurs, on average 2 to 3 times, mostly 2 times, but it can occur 3 times as well, right? So on average, right, this is something. And if I say that, some of you should be thinking right now and saying, okay, but isn't time fractal? Okay, yes, time is fractal. And what does that mean? That means that on average, every cycle provides 2 to 3 opportunities, right? You understand? Every cycle will provide 2 to 3 opportunities. Most times, it will just be 2 times. So 90-minute cycles, it doesn't matter if it's the, daily cycle. It doesn't matter if it's the weekly cycle, right? On average, you will have 2, opportunities forming. 2 most of the times, like 70% of the times, there would just be 2 opportunities, and then the other 30, then you will have 3, right? So that means that if there's a trade in Q2 of whichever cycle that you're looking at, right, and then you get a trade in Q3, what does that mean? That means that, just sit on your hands. There will be no more trades. There will just be expansion or consolidation. So you can use this knowledge, this information that you have now to, manage your risk even, better, right? Now you know that you have this amount of shots per cycles, and yeah. So here you can see where you see these, what are these? These X's, which is, above the swing high and below the swing low and above the swing high as well, right? So first of all, you should already know that the S&P 500 and the Nasdaq and the Dow, they should be moving symmetrical. So anything that's out of place is a cracking correlation. Here, right, this is a swing high, but here it's a swing low. So right here we have diametrically opposed swing points. Wherever you see this happening, right, it's a sign that price will undergo a reversal, right? So this is what? Look at it again. It's a swing high. This is a swing low. And they occur at the same time. On a normal day, there should be a swing high and there should be a swing high. They should not be, opposing one another. Here, right, at the low, just what you would expect, by the way, right? So this is literally typical, right? Whenever you have reversals in regards to the weekly cycle, 1 hour precision swing points. So here at the Dow, and take note that most of the times, literally, right, whenever you have the asset class run liquidity, the last 1 hour candle, whenever you're working with the weekly cycle, it will be a 1 hour precision swing point, right? And this is specific to the candle that runs liquidity, right? It doesn't have to happen, with the other candles. They could be just precision candles, which are, basically precision swing points that are not swing points. So here, wherever you see, and, going forward in the video, whenever you see, this blue arrow, it represents a precision swing point. And now we'll go into something else that, I haven't talked about. I probably hinted to it, but I did not talk about this. So here, right, you can see that, this level right here is delineated by the last down close candle before, this expansion upwards, right? So this is the last down close candle, the last 1 hour candle before the most expansion that happened within the third quarter, right? This would be, something, what ICT traders would call a breaker, right? But, I do not call it that, right? This is a precision breaker, right? A precision breaker. And the only reason why I say, breaker or, added breaker to the name is just due to the fact that, ICT is my mentor, and this is I believe the base of what a breaker is, even though according to him, the breaker would probably be this low, but due to the fact that this is a precision breaker, right? This is the candle that all of this buying happened in, right? This down close candle, right? So while price was here, right, consolidating, they already knew that they were going to send price higher, which is why, right, we anchored, this line right here, the top of the level, to this candle right here, and the lower level of, all of this level right here is anchored to this swing low. The reason why it's a precision breaker is due to the fact that here, while we had, price falling through the breaker, right, leaving the breaker in premium, right? So price left the breaker in premium and was consolidating here, right? Here, price returned to the breaker while it was in discount. Do you understand? So there's a cracking correlation in the placements of the breaker right here between the S&P 500 and the NASDAQ. Do you see that? So this breaker is in what? It's in discount. And what else is important to this is from Q3. So we're taking a level, right, from Q3, cutting it through, Q4. And it's reactive, right, in Friday. So it's a bit confusing, right, when looking at the weekly cycle. And this is why, doubling theory is important, because doubling theory has, nothing to do with quarters per se, right? It just, measures fractals of time and reflects upon them. So, for example, doubling theory would reflect upon, month to month. February reflect on January, March reflect on February, and so on. And here you have Friday reflecting upon Thursday, Thursday reflecting on Wednesday. So here we're completely cutting through whatever, quarterly theory, right? So Q3 is where this level is derived from. We cut through Q4. And then due to the fact that this precision breaker is in discount, right? And discount is up. You already know how we, mark our premium and discount, right? It has to be on the base of precision candles or precision swing points. So these candles right here, what are they? They are precision swing points. That's what they are, right? So here we had this candle run below here, right? This level, grab liquidity. It went below the true week open as well, formed a precision swing point. And here is something else that I was going to talk about, during the course of the week, but it makes sense to just do it right now, right? If you look within this precision swing point, and this is what I need you to do, right? You'll see that precision swing points, real precision swing points, because you can have fake precision swing points, right? Real precision swing points are fractal. What do I mean by that? Okay, I got to show you. Let's go to the 15-minute time frame. Remember, right? We're at a 15-minute time frame right now. Look at this, right? So here you have a 50-minute time frame precision swing point within a 1 hour time frame precision swing point. and I'll just, leave that for your homework to, dig through the charts, and you'll find 4 time frame precision swing points within daily time frame precision swing points whenever you have reversals. So here, right, you would ask, why you said that the wicks don't focus on the wicks. Okay, when we said not to focus on the wicks, that was, a time where, we weren't even talking about precision swing points yet, right? We were just talking about sequential SMT. But precision swing points, right, they are, in my opinion, due to the fact that the real ones occur after sequential SMT, and sequential SMT is a formation of, a completion of precision swing points, then precision swing points are more important to me, right? You don't need, a higher time frame period where you don't need anything else, just the precision swing point right here after we have sequential SMT. So here, there's a wick, right? Yes, and even though, right, some of you might be scared, no, you don't have to be scared again, right? Here, you'd see that, okay, but it's just a wick. It wasn't a closure, right? The closure, you can look for a closure here, but whenever you're looking for a closure, right, to, give you surety that you're looking at a reversal in regards to sequential SMT, that's only when, you don't have a precision swing point, right? So here, even though there's no closure, the fact that we have a precision swing point here makes it higher probability than even if there was a closure without a precision swing point. And here you have layered precision swing points, whereas you have a 50-minute time frame precision swing point within a 1 hour time frame precision swing point. With this, right, it's so powerful. You do not even, you don't need to be looking at anything else but the triads. And when you were trading the weekly time frame, which is what we're going to perfect before we go to the lower time frames, right? You need to understand this right here. You need to know what a precision swing point is. You need to know what a precision candle is. And, especially if you're trading the index futures triad, you need to understand these levels. The precision breaker. What is it? This is what it is. So here you can see that we have this line right here, and you only use this for support, right? So this would become a higher time frame level, right? This would function as how you would want a higher time frame fair value gap to actually function, right? This is how, even though, most of the times they don't deliver this well. Why? Here we have price accumulating within the precision breaker, right? So what happens is that in one asset, right, the precision breaker will serve as, either support or resistance, and the other one will serve as a magnet. The turning point would occur here where you have the sequential SMT, you have the precision swing point, another precision swing point within that precision swing point. Then when you go here, right, this level is derived from the 1 hour time frame, you go to the 15-minute time frame, and then you will see, right, your entry points. You will see. And just to let you know, this isn't even like as clean as it gets. It's literally, the only reason why you have so much of you, passing your challenge, you're trading properly, you're able to read price action, which is the most important thing. That's why I'm here, to show you how to read price action, right? You decide whenever you want to go in, press your buttons, when you decide to make money. I'm here to show you, how to read price, how to know what price is going to do more times than not, right? So with that being said, we will be back Wednesday at 6 p.m. Eastern Standard Time, right? If there is, any improvement to, price action. And oh, I didn't even say this. As you guys remembered, right? Right, we expected Thursday to form the high of the week, right, which it did here, and then we expected Friday to either reverse and cancel out all of the week, or just return to the range, which happened right here. So yeah, I don't know. I just like, most of the times whenever we get, our direction right or whatever, it's been, 7 months now, right? I just don't feel the need to, just come and clip it anymore because I think you guys understand the level that we are at, right? It should be boring. That's how it should be, right? You make some money, it should be boring. You lose some money, it should be boring. You don't really care much because you're using risk management. Yeah. So with that being said, I hope that you have a wonderful week. I'll be here. I'll be reading your messages. I'll be in the chats. Even sometimes like I'm not there, but I'm always there. So study this one, take notes. I tried to not make it too long. Right. I tried to, cram the information within 30 minutes so that, because I know that you have a lot of information already. I know that you have a lot of things to study already. But yeah, I hope that, this helps you, and we'll talk at 6 p.m. Eastern Standard Time, Wednesday. If there's any, development in price before that, we'll definitely, be having a surprise live stream to discuss it. Have a wonderful day.